Welcome to Stephen Johnson Stocks. The last video I released was how I grew my account from like $600 into $3,500, and then I blew it up because I thought I was out of an ARCI D8 trade while in Thailand, and I wasn't. I was only half out. It was not a lack of discipline, it was a recklessness. And just leaving a trade for a couple of days while I was partying. And I blew up the whole thing because ARCI ran. And I didn't even know that I blew it up. Otherwise, I would have cut it immediately. So I had to obviously start with 550 again. And I've since grown it to 2,380. I've grown my small account 430%. Nearly 4.5 times over I've grew it. And I'm going to show you how I've done it, and providing that I don't get lost in some tropical island full of ladyboys and alcohol and other substances, which I didn't take because I'm a sensible boy, I think this time I should be like at the account of 3, 4, 5, 10,000, because I've really not got any issues with discipline. Haven't had any issues with discipline in months. Worst trade I've ever had. I had to take it. I was like 100 down and then it exploded, and I'll show you that trade, and I lost like 300. I had to cut it straight away. Had I not cut it, I would have lost about $1,000. But I really do have the discipline there, and I've been able to cut the trades, and I'm making money. So let's see how. So here we go again. This was from the August 27th. The money dropped in the account. Total equity was $697. There's been 9 trading days since then to get to Friday. I haven't traded the last couple. So if I just do a calculator, 2,382, say minus 700, I think I started with, is 1,682 divided by 9 trading days. I mean, I didn't trade the last couple because I was out. It's making like roughly $186 a day, roughly $200 a day. No, like on average, no huge gains. I did have $1,000 day. Had days where I've lost 300. So obviously on the days that I make money, I'm averaging maybe 400, 500. And with this strategy, I don't really have many red days. I had one red day when I didn't actually follow the strategy. I was just bored, so trying out something new. Today, we're just going to look at basically from when I started with the $700 account. With ARCI, we'll quickly take a look at this one first. I quickly grew my account from 700 to nearly $1,000. So that's a 30% increase on the account with a $260 win straight off. And then we'll look at ADSA, my biggest loss, and we'll look at the biggest win, OPGN, which was when I had the $1,000 day. So I took money on OPGN twice and tops. I think this was all in the same day. So I'll have a look at OPGN, ARCI, and the big loss of, what is this, ADSA. But another thing to highlight, I've grown my account 3.5 times from 700 to 2,300 and something. Made $2,000 in profit minus the borrow fees, which takes it down to like 1.7 or whatever. But I've made $2,000 in profit of just 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades over 9 days. So that's on average 1.2 trades a day or something like that. You don't really need to trade more than once a day. I rarely do. It's important to show that you can have like 340% growth trading once a day. So ARCI is your textbook stock that will just fail over and over and over. Gapped up on 20 million volume and failed here. It ran here, but it didn't gap up first, but when it gaps up, it often fails. Here it had a kind of a second run at like gapping up from kind of, well, no, it gapped down, but then it ran a little bit anyway. But generally, you'll see when the volume starts to fade, like the volume's fading now. Ran on 12 million, then it ran on 6 million. Now it can't really get past the 12 again. Unless it's got huge amounts of volume, it's not going to have these spikes again. And every time it goes lower, there's more people underwater. So basically, as soon as I saw this spike up again, I took a tiny position in the 575s. You can see there's kind of some little bit of resistance around the 580s, 575s. So it's kind of top tier. It's where it's kind of, it's in between where it's closed and open tier. So that's, I wouldn't really call that resistance. But anyway, I took a small stab because it made a big run. Very, very small shares because you've got no idea how far this can go when the move first starts. Added in a little bit here. Risk is obviously the double top across here. If it kind of goes above here, then I've got to be out because a load of shorts who are doing what I'm doing are then underwater. But it's very simple. Start a position, added a little bit, risk of days here. As it comes down, I short a little bit more, expecting the wash. Cover some here, you can short back into the spike, and then ultimately I was waiting for a long down here to like cover the rest to see how far it would crack. Traditionally, it gives like nearly all of its gains back. So even if it gaps up to the 8s, it'll come all the way back down to the 5s. But I mean, this is a much smaller move on lower volume, so you've got to expect it to maybe come down to really where it closed the other day, which is the 420s. And it didn't. It made the 460s, but it didn't get any lower than that. I remember. Well, actually, it touched the 420s as its previous day support as mentioned, but I didn't stick around, to be honest. Once I saw this kind of higher low coming in, I was out. But I took from 575 to 475, and when we had this like kind of higher low, sometimes these can reverse. I just didn't want to take the risk. Tops, again, unless it has massive volume, it's a downtrending chart. We can see the chart's trending all the way down. We can see the stock, whenever it has a green day, it's notoriously famous for having the next red day, continuing the downward trend. So when it gaps up here, all of a sudden, I'm kind of thinking, well, where's it going to gap into, and where's the resistance going to be? And you can actually see straight away, without looking, you're looking at kind of top, bottom, then you've got all this consolidation, tops, bottoms. And I know it's hindsight trading, so it's easier, but comes up, where does it bottom? Bottoms here, opens here, starts bottoming again, cracks through, and then the next logical area for it to test when it gaps up again is this like 909 level, 915 level, maybe even the 920s. So I'm kind of looking at that area for resistance. I was starting in, you can see, I was a little bit early. First is at 9, second's at 986, but I'm taking small positions in. So when I see this pop up, I'm in a starter in the 9s. I take my second position in the 980s, and then it's blew through that kind of 9, whatever, what was the resistance level? It's blew through that 915's resistance level, so at this point, it's looking pretty dangerous, and if this doesn't come right back down, then yeah, I've got to exit, and I've probably lost a few $100 there. I don't know how much exactly, $300. Yeah, maybe I'm a bit lucky in this trade, maybe I was a bit reckless, and I need to analyze that I got away with one this time. But as it happened, as it was coming down, shorted a little more from recollection on the backside, and then you're looking to cover into the wash, and the rest is history. But again, the downward chart, the fact that it never holds its highs, the fact that we had the resistance around here, which it did break through, but only briefly, gives me some comfort in shorting this. But in hindsight, I wouldn't really. I think it's okay to attack this front side, but you've got to attack it super light, like 50 shares, 150 shares. Then if it starts holding its highs here, then it's going to likely be on its way up and shorts are going to get squeezed. But the fact that it comes all the way down, that gives us conviction that it's a little bit of panic, but it quickly comes down as investors realize that it's a shitty stock. So again, on review, a little bit lucky on this one. But in terms of the long-term vision and the long-term expectation, I was right. Just my entries were a little aggressive, and yes, this is something I also need to work on. And that's a wrap, guys. Hope you enjoyed it. That's how I grew my account like 340%. Sorry I couldn't show you the other loss as well. The video's getting too long, and I need to fucking hit the road and split like a banana. Because I've got many layers. I peel like an onion. So I hope you enjoyed it. I hope there's some lessons there. For me, the takeaways are to continue to not be aggressive on the front side too much, because you will make even more on your profits will be an even bigger return on investment if you just have some patience and on the ones that are overly aggressive and they do run quite a lot, and the stocks that don't do what you thought they were going to do, and they don't peak as much as you thought they're going to do. It's okay to be in third size, half size, and just take that profit. It's better to be safer than sorry. Peace out, love you guys, goodbye, good night, respect.